you've been active in the market fairly recently. I know you sold your stake in Domino's Pizza over the summer. Have you been buying and selling anything else, Bill?
No, no, we own really the same things we've owned. I mean, nothing materially. We always make adjustments. The private funds that we have capital flows in and out, and as a result, in order to keep the funds proportional, you'll see often in our 13F, a small amount of trading. But we have bought some more Universal Music in a couple of the co-investment vehicles that we manage. It's already, I would say, quite a full position in PSH, so we haven't added to it. But if it were a smaller position, I certainly would. But we bought Universal stock as recently as the last few days for our co-investment vehicles.
So the money from Domino's, I mean, are there any plans for that earmarked for anything? I mean, are there any company sectors that you're particularly keen on, that you're tracking at the moment? Where might that Domino's money go?
We're looking for a great company to invest in. We're using it to buy back stock and a small amount for interesting hedges that we find. We obviously don't identify our targets in advance. I and other members of the team are doing work on a number of companies that we think are interesting, but nothing's gotten yet to a price where we're excited to own it.
I mean, for equities, I think more broadly, I mean, lots of talk of a roaring 20s. I mean, is that still possible for the equity market, or should investors expect lower returns than they've been used to over the past decade?
Look, it's much easier to make money in the stock market in a rising stock market environment, and if rates, a declining interest rate environment is generally a market in which asset prices increase, and so a rising tide lifts all boats. So if you just own equities, I think right now we're in a rising interest rate environment, so that's obviously more challenging. And really, I think that what matters is are the central banks around the world going to stop this out of control inflation? I would say I think they will. And what's the new level of long-term inflation? Is it going to be? Are we in a world where it's difficult to create? With the federal, as recently as 24 months ago, central banks around the world were worried about deflation, and that's been a very, very dramatic change. And so I think you can do very well as a stock market investor if you find really high quality companies and you buy them at attractive prices. And I think today, is a pretty good time. It's a pretty good point of entry, right? March of 20 was obviously a very, very good entry point. And anyone who bought stocks in March of 2020, something I went on TV and advocated on March 18th of 2020. I said, this is a moment. I think this is sort of another moment where I don't know how well you're going to do over the next 3 or 6 months, 12 months. It's a highly uncertain world. But over the next 3, 4, 5, 10 years, it's a pretty good place to be an investor, or time to commit more capital to equity markets. Although you got to pick carefully. You want to own the super high quality, well capitalized, dominant businesses that will be here, 30 years from now. And that's why we own companies like Hilton and Universal Music and Restaurant Brands and so on.
So what you're saying, whether or not there's a Q4 correction or whatever, that doesn't really matter. If you're looking further out, a few years, 3, 4, 5 years out, now's a good time. You'll look back on today and think, yeah, that was a good time to buy.
For sure. That doesn't mean the market's not going lower in the next 3 months, right? But I wouldn't commit all of your capital today, right? Keep some in reserve. A bit of as they used to call it, dollar cost averaging. It's S&P's down, approaching 20% for the year, and it wasn't highly overvalued at the beginning of the year. So I think prices are fair to cheap.
Well, I mean, you've kind of answered my question, my final question. Where do you see Pershing Square in 5 years' time? I mean, will the persistent discount in London see you list in the US? Either way, you'll stick to your current strategy, I guess. Is it a core portfolio of around 10 stocks with opportunistic hedges? Is that fair to say?
Yeah, I think the strategy is not going to change. But we're going to keep working at the discount thing. And what I would say there, we talked about in the letter that a way in which we could be listed. I think the right place ultimately for a US managed portfolio of North American companies is, logically in the US. And if there's a way for us to get there within the rules, we're going to figure it out. And, part of my day job is helping the companies we own optimize their businesses and get the valuations in the market that they deserve. And we're putting some thought and energy into it for ourselves. But in the meantime, I am enjoying buying back 50, 60,000 shares a day at today's prices. I just think that's a good deal. That's the best deal I know in markets.
Great. Bill Ackman, CEO of Pershing Square Holdings. Thanks very much for joining me today.
Thank you very much.